So now we have another interesting panel, again on impact in nature, because nature is certainly not a moral, investing in nature is certainly not a moral obligation, but really a crucial economic challenge. And we have the pleasure to welcome Gauthier Queru. Sorry if I say your name, Gauthier, and a managing director of Natural Capital at Mirova. He will tell us how investing in nature-based projects can really bring impact and value. And Gauthier, just a little word, we don't know each other, so it's a pleasure to meet you today, Gauthier, but I read a lot of things yesterday while preparing this panel, and actually you should really be proud to have Gauthier today because he's a real influencer in everything that is nature, biodiversity, and responsible investment. So I think that it's a really pleasure to have you here. And Gauthier will explain us that after 10 years and 1 billion invested with Mirova in nature-based project, or really are the lesson learned and the impact that can be taken and still the challenge or not. Thank you, Gauthier, and have a nice time with us. Can you put it back at 0? Do you want a question? Okay.
That's work like this. Okay, that works. Okay. Hello, good afternoon. Bonjour à tous. Thank you very much, looks like, for having me. So I'm not only an influencer, I'm also managing director at Mirova, in charge of the Natural Capital Department. And indeed, after having been in the space before, I suggest we land back to Earth and think of the role of nature in the economy, the value it creates, and how investors can get access to this value creation driver. And actually what I will share is based on 10-year experience of investing in nature at Mirova, and with more $1 billion raised on this topic. Just to outline that this is not so new and not so small. So what are we talking about when we speak about natural capital? Actually, natural capital is another word for referring to nature, but in the way that nature provides goods and services for the society, for the economy. Actually, for many years, for decades, we have overexploited nature without investing in it, and we have considered that nature was infinite. Now we tend to realize that it is not, and we realize that it provides so many services we depend on. And actually, according to PwC, actually more than half of the GDP is dependent directly on nature, which represents $58 trillion. And so the natural capital, so the natural assets that we have provide ecosystem services that then in turn provide benefits to the society of the economy. But as you know, the problem is that all of these resources are under threat. We are overexploiting it, and so we hear about land degradation, deforestation, soil degradation, biodiversity loss, and climate change is accelerating it all. So this has severe consequences around food security, around acceleration of climate change, social conflicts, and so on. So we know about the problem. I will not elaborate further. But the good news is that there is a really positive momentum around the protection and the restoration of nature, which is coming in the first place from the United Nations. Actually, especially for the past 10 years, there has been a real acceleration in framing nature protection and restoration in public policies. This has been the case in a well-known climate convention, and we'll have this year the 10-year anniversary of COP21, and there will be COP30, so in Brazil, and where forest is central. Nature is an important parameter in the climate equation. There is also the United Convention on Desertification, but it's a small one and that has promoted soil health. And above all, it's the Convention on Biological Diversity that is key, because it adopted back in December 2022 the Global Biodiversity Framework that is the equivalent for biodiversity of the Paris Agreement for climate. And so since the adoption of this agreement, we have seen growing number of regulation being implemented in different countries. And in the European Union, for instance, there has been the nature restoration law that imposes that member states have a clear roadmap for restoring nature aligned with the global biodiversity framework. And in turn, large corporations are more and more also adopting, I would say, strategies that align their business model with the protection, restoration of nature that is connected with climate and with other topics. And so there is a political momentum, a business momentum around corporates doing strong commitment to this nature protection, and that creates market trends and drivers for investments. Actually, we are seeing three economic drivers towards investing in nature. One is basically the need to produce more wood for a biocircular economy. We need to replace steel, plastic, concrete by wood, and at the same time, we need to restore large areas of land. So planting more trees in a sustainable way to produce wood is an important economic opportunity. Transforming also the food system, and colleagues from Inox referred to it before, we need to make this production more resilient, more sustainable, to meet also the growth of the population while also restoring ecosystem. And this is where regenerative agriculture, agroforestry is also another economic opportunity. And finally, the power for nature to sequester carbon has created an opportunity around carbon credits for the past years, and I will come back to this. And what is very important is that in the context of this global trend, policies, industrial demand for sustainable production and macroeconomic opportunities, there is a real economy that is really emerging, that is made by actually sustainable operators, project developers, a restoration economy, if you will, like we have seen in the renewable energy space, a real sector emerging made of project developers, equipment providers, and it's not only about investing in a theme, it's about investing in companies, in operators that are themselves able to attract the new generation of entrepreneurs, to attract talented people, and to grow their business. And in the face of this, we're seeing, as I was mentioning, off-takers from being corporates for food, for fiber, for carbon credits that are also becoming serious about the resilience of their supply chain. So the economy is being transformed itself. And this is where we see the opportunity and where actually many investors start and look at, because they are feeling that the world is changing. They are aware that nature plays a key role for the economy. And more advisors to investors, more and more publication make the case for natural capital investing as a new investment theme. And this is really what I will try to debunk a bit, to explore further in the next parts by also giving concrete example. The trend is there, but I would say it's not fully mature and stabilized, but we are getting there. So how to invest in nature, and what have we done at Mirova so far? So yeah, just in a nutshell, I did not present Mirova. We are a fund management company specialized in impact investments. We are part of Natixis Investment Managers, itself part of BPCE, a lot of names and acronyms, but we are really the affiliate fully dedicated to sustainability. We have offices in Paris, here in Luxembourg, and my colleague Tara is in the room. We have offices in London, in Boston, Nairobi, Singapore, and we manage close to $39 billion in both listed and private assets. But everything is related to impact. And in the field of private assets, we have been active in different types of activities. Of course, renewable energy has been a big thing for the past 20 years. We have been investing a lot in the energy transition, and we have raised significant capital out there. But the idea is clearly for natural capital to follow the same path and to learn from the the success of renewable energy as an economic sector, renewable energy as an asset class. And the idea is really to replicate the momentum for investing in nature with, in the years to come, a fully fledged asset class. I would say for the moment, it's more of a investment theme that is integrated into different strategies, but we're seeing also single strategies emerging. And so in the field of natural capital, we have done two main types of strategies that correspond to funds that we have developed. First is what we call environmental assets, and this is mostly high quality, of course, carbon credits. And we are speaking of environmental assets because there are also biodiversity credits that are emerging as an instrument. And I will elaborate further on each of these verticals. But here the idea is to finance projects on the ground that sequester carbon, like reforestation, that can generate carbon credits, that have a market value and can be sold. And like for renewable energy, instead of planting windmills and being paid by the sale of electricity, here we plant trees and we are being paid by the sale of the carbon credits. And this is in itself an investable and promising sector. And similarly, we also invest in so-called sustainable land use, which is also a bit about planting trees, but here it's about selling the commodities, food or fiber, coffee, cocoa, tree nuts, wood, that the economy needs. And actually, we apply a lens of infrastructure investment to nature. So let me deep dive into those two strategies. So first, environmental assets. And before that, on those two strategies, that was part of the title, we've been able to raise for the past 10 years more than $1 billion from a mix of public and private investors. And here it's interesting to mention that we have put in place blended finance vehicles, where actually the public investor provides de-risking or more concessional capital than the private investor that provide more commercial capital. And this blended finance is a big thing in natural capital space because it's really a way for public investor to encourage more private capital mobilization in the face of scarcity of public money to fill in the gap of nature finance. And so there is very promising development in the space, and we're able to mobilize more and more capital from both public and private investor. And we're also seeing, interestingly, more and more corporates putting money on the table to support nature protection and restoration for their own net zero nature positive strategy, but also for their resilience of their supply chains when they depend on natural resources, when you think of cosmetics, food, fiber, and other types of activities. And we have been also working in coalition with civil society, UN bodies, certification that is also essential to address the complexity of the underlying asset class. So now we can switch and focus on the environmental assets. So again, mostly carbon credits. We can elaborate on biodiversity credits, but for the moment, it's more of a buzz than a real market. There are a few pilots and some methodologies that are being tested, but our perspective at Mirova is that it's still very niche, and if we are here to mobilize finance at scale, let's focus also on what already works and scale this up. And actually, carbon credits is really sending very positive signal for the past 2 years, correcting errors from the past, and then turning to a bright future. So the strategy related to carbon credits, I was briefly mentioning it. It's really about financing projects that contribute to planting trees, to restoring peatlands or mangroves, and that sequester carbon. And with this, the carbon credits, they can generate revenue over the long run. We see many opportunities in emerging markets where there are vast areas of land degraded that can be restored, but there are also opportunities in developed countries. And we are seeing a diversity of nature-based solutions. There are also some technical solutions that are emerging as well. And so here, just to mention what a carbon credit is, it's really a title or an asset, and we can debate on its legal nature or the ability to use it as a collateral, but there are a lot of accounting, tax, and also legal progress to recognize these assets as standalone assets in reality, and they correspond to 1 ton of CO2 sequestered or avoided that some market players can use for claiming some emission reduction or removal. The leader in the voluntary carbon credit market are Verra, Verified Carbon Standard, and Gold Standard. And there are also some regulated market, and the UN are creating their own credit, but for the moment, the vast majority of the market is from Verra and Gold Standard. And basically, I was referring to different types of activities that can generate these carbon credits. And I'm speaking of afforestation, reforestation, which is basically about planting trees in formerly degraded lands. It's also about doing improved agricultural land management where you can sequester carbon in the soil when you use, especially when you increase organic matters, you increase the sequestration of carbon. It can be also deforestation avoidance, protecting primary forests. There are also so-called blue carbon, which is a lot about mangrove and marine ecosystem restoration. We could add also peatland. And tech-based, where we see more and more also R&D efforts on sequestering carbon through also technology. It's still much more expensive than nature-based solution, but it has also interesting features that needs to be explored. And so the idea is really to finance these types of projects with, as I was saying, infrastructure approach. These projects are mushrooming everywhere around the world. There is right now a booming market that is, so globally, there is a global momentum where, as I was mentioning, there are more and more solid project developers that are, it's not, NGO funded by philanthropy anymore. It's really solid project developers supported by structured finance. And these are pretty sophisticated players. The market is getting more mature with enablers, with rating agencies, with digital platform, marketplaces, with law firms, with consultants to do due diligence that are more and more efficient and with good division of work. There are standards, as I was saying, that went through enhanced improvement over the past 2 years with all the integrity issues that have been mostly addressed. And then what is very important is that we are seeing more and more off-takers that are committing to the long run for buying carbon credits. And it's especially the case for tech companies in the US in 2025. And I think it's important to mention that in spite of the current circumstances we know that were debated earlier today, we are seeing an acceleration in the commitment of big companies to also buy carbon credits to be net zero, and that's pretty encouraging. And so altogether, really creates investable solution, bankable context for investment. And if we focus on a given reforestation project, it has some features that are very similar to infrastructure. It's really, we are cash flow driven. We look at the CapEx, the cost needed to plant the trees. It's about land preparation, equipment, workforce, seedlings. And then with the generation of carbon credits, you have a traditional J-curve that we know in the infrastructure, and with the ability to really have thorough due diligence, robust structuring, and really a market that is becoming super attractive. Why? Because the technology, planting trees, is more and more mastered by the project developer, and because the off-takers are willing to pay a high price. And so altogether, it makes it, opportunistic to invest in the space, but it requires solid expertise that we have developed at Mirova. And we have a lot of projects already exited. We went through the full cycle. We have projects we have invested in. We have a lot of projects in the pipeline. We are pretty front runners in the market, but there are more and more coming, so it's a good signal. And we have a concrete example with a project developed by Replanet in Costa Rica that consists in restoring degraded land that was degraded due to overgrazing. And it's about planting more trees to restore the degraded land, but still integrate the social dimension with rotational grazing to maintain the business, the activity for the farmers while restoring nature. And it's important in all types of investment. It's really about sequestering carbon, but at the same time, doing good for nature, doing good for the people, and avoid doing harm, as it was said before, to all the aspects. So there is really a market signal that is becoming more and more tangible, especially since the beginning of this year. This is accelerating in spite of the context. And so, yeah, the key message is this is promising. The second vertical I was referring to alongside carbon was the so-called sustainable land use. So more about we're still in planting trees in a way, but the second part is more about producing food and fiber. So I was referring to cocoa, coffee, tree nuts, wood, that also we are all dependent on, including today at the coffee break. And so it means that the opportunity or the challenge here is to ensure that we have resilient and sustainable supply chains to foster prosperity. I know growth is always debated, prosperity is more consensual, but actually it's about thriving within the planet boundaries. And here we have a similar strategy as the one on carbon. It's just that we are investing more traditionally in debt, mezzanine, or equity in projects on the ground, either in emerging markets or also in developed countries that produce sustainable food or fiber. And here the revenues are pretty similar, but they are not coming from the carbon credit, they are coming from the certified commodities. And we have done this actually for many years. And it's not about acquiring land, but rather about financing value creation and activating this value creation driver. It's about better yield with more adapted agronomy practices, of course, still with strong sustainability. It's about selecting the right species to meet market demand. And if you think of coffee, for instance, there is a massive demand for Arabica that is now more and more demanded rather than Robusta. And this is true for many other markets where the choice of the quality is key. The premium, I was referring to Rainforest Alliance, FSC, organic, fair trade, they drive price up. We also can sometimes add some carbon credits because when you plant agroforestry system for coffee, you also often plant extra trees that sequester carbon, so you can claim a bit of carbon credits, but the main play is the food or the fiber. And often we include processing unit downstream to integrate downstream value upstream. And it's really about financing productive assets. And this works. We've done it, and we're doing it again because now we are launching our second vintage. The first vintage that we launched was really investing in agroforestry and sustainable forestry. We launched it, that was how long ago? 7 years ago. And now we are moving to the second vintage. And with the first vintage, we used blended finance. I was referring to the fact that public money could really bring in concessional capital to unlock more commercial capital. And this is really something we have put in place and that has been also very efficient. I think it's another important signal. In addition to investing in natural capital, blended finance structure, they do work. It's efficient, it's real, and we're happy to count the government of Luxembourg as a key partner in our funds. And so very grateful for this support, and that has also enabled the mobilization of much more funding. And so with this first generation fund, we've been able to invest in 13 projects all around the world. And actually, they all consist in planting trees in degraded lands. That's I would say, the common denominator, but in different regions and in different sectors. We're working, for instance, in Central America in a project that produces cocoa and has also a strong processing unit and work with local communities to create a job in this prior deforested area. We work with Eurapi to produce sustainable coffee in Colombia and Peru. We work with Atlas Food Company in Morocco to develop a sustainable supply chain for citrus, restoring degraded land and using drip irrigation to ensure a really efficient use of water and, again, not over-exploiting the resources. We work with Pamoja in Tanzania and Kenya, who produce macadamia nuts. And actually, if you go to any organic shop in Paris, and I need to check in Luxembourg, but in Paris, they would all come from Pamoja. If you buy macadamia, organic macadamia nuts. We work also with Acre in Madagascar. They develop Centella, which is a product, an ingredient for cosmetic, used by L'Oréal, L'Occitane, and other, and that is also creating a lot of value upstream and produced through agroforestry practices. We work with Mountain Hazelnut in Bhutan. They produce hazelnut for the Chinese and Asian markets. We work with Kenemer in the Philippines that work with thousands of smallholder farmers to produce sustainable cocoa to be sold to Mars. That is an off-taker and that wants to have resilient and sustainable supply chain and wants to match actually the supply and the demand. So this big project in the Philippines is a way to meet the demand for cocoa in the Asian, Southeast Asian market especially. And Mars is also active in, of course, West Africa and Latin America, but to cover also the demand from different regions. So this is real. And each time, again, we're working with solid companies. It's not NGOs, it's not small cooperative, it's businesses. It's SMEs that are growing, that are more and more solid operators, that are working at scale to accompany the transition of the supply chains, like we did accompany the transition of the energy system. And that's working well. And so maybe to conclude, because I would like to take some time for a few questions, but yeah, natural capital is scalable, it's impactful, and it can provide different types of return with especially different models. In a portfolio, it's an interesting private market offering with interesting diversifying power. Of course, it's deep impact, climate, biodiversity, social inclusion, often water as well. And it's also a pretty interesting risk-adjusted return because you get often a lot of support from the public sector, which is more of a buffer, a cushion. You have also price signal for the monetization of ecosystem services, I refer to carbon credits, certification premiums. And we're seeing policies in favor of these investments. So for us, it's a good allocation in the portfolio to diversify the risk, and that is uncorrelated to other asset classes. There is more to do, more to come, but it's a collective effort, and I'm happy to answer any question and to join forces with others. Thank you.
Thank you very much, Gauthier. Is there any question for Gauthier? You all want your coffee?
Sustainable coffee. One question here.
A question or?
A real question.
I noticed that you were using Verra standards. Yeah. Are you not concerned about potential liability because of using Verra? Thank you.
We know that in many certification, and we are not a shareholder of Verra, so we are not promoting it as the silver bullet or the one standard. It's just the most advanced one that is representing the largest share in the market. And because the market is growing, there has been also much more scrutiny. This is more and more addressed also in the legal framework, in the legal agreement. So the answer is no. We are doing our own due diligence. We are working with solid law firms to ensure that any form of liability is addressed. But above all, we are selecting projects with genuine positive impact, and we are not relying on the standard, which is for us only a methodology to measure the carbon. We are, in the first place, supporting a really impactful project, and our internal expertise is much needed to ensure we select the right project, which is, to us, the best hedge against any form of liability and in order to maximize the positive impacts.
We have another question.
Yeah, thank you. Yeah, I was happy to see my own project finance graphs show up on your presentation. But on the carbon credits, future sales and all that kind of things, you kind of need a capital market infrastructure. What kind of trading platforms or stock exchanges do you see, well, existing or more likely coming up? Is there a place for the Luxembourg Stock Exchange or the Green Exchange to start listing those things to make life a little bit easier
Yeah,
in a difficult world.
Yeah, we definitely need a solid infrastructure to support the growth of these markets. And so stock exchange, the know-how, and we know that for many years, entities also like ICE have been trading the allowances under the EU ETS, the emission trading scheme. The point with carbon credits is, as I was mentioning, they are attached to a given project that has a specific location, specific features in terms of quality, social, biodiversity, co-benefits, etc. And if we speak of a market, you know, it's more like the wine market. Excuse me, it's maybe a French perspective, but the wine market exists, but it's still, you know, there is, for good reason, not just a red wine market and a white wine market. There are plenty of different region, vintages, and, you know, and so the carbon credit market is a bit like this. So we need a platform, but that doesn't mean full fungibility. So the one platform that can emerge is the one that is also integrating these specificities. And in my perception, exchange are more tailored to compliance market, while maybe brokerage or exchange platform that are maybe less liquid or more for voluntary market.
Yeah, no, it's of course there's always hopefully a migration from the ETS into voluntary and that kind of making them compatible or something else. But do you see it more maybe rather than the wine, see more like if you look at crude oil, there's 192 standard contracts,
right? Yeah,
and then each tanker is trading at a premium or a discount depending on the actual composition of the crude in that particular ship. So it's kind of, the market is there, the infrastructure, the technology. Now with AI, it's even easier. So you could kind of see that direction of travel.
Yes, no, you're right. It's coming, and especially because also there are rating agencies that are stepping up, and so we can qualify better the specificity of the project. And yeah, as long as a platform and an exchange is able to make these differences, not to be fully fungible, there is fully room for growth. Sorry.
It's where good data comes in.
Yes, exactly. Data is king for all types of investment, for sure.
Thank you very much.
Thank you so much.
Thank you very much, Gauthier. That was really great.